Imagine a monkey working hard all week at a banana farm. At the end of the shift, the monkey gets paid 100 leaves. It's honest work, and our monkey is thrilled. But right before heading home, a sudden hand reaches in and takes 20 of those leaves away. That hand belongs to the monkey government, and those missing 20 leaves are income tax. The government uses this percentage of everyone's paycheck to keep the jungle running. They pool the leaves together to build roads, fund hospitals, and pay for firefighters to handle emergencies. People have always found this system frustrating, and the rules of what gets taxed have a messy history. In the early 1900s, the United States had an intense political debate over whether bananas arriving on steamships should be heavily taxed as an expensive luxury or spared as a basic necessity. The rules were so chaotic that bananas themselves sometimes became the currency. Because the fruit held immense value, untaxed bananas were occasionally used right at the plantation to bribe officials in exchange for special tax treatment. While parting with a portion of your paycheck can feel unfair, and the rules have often been messy, pooling resources through an income tax is the basic requirement for keeping any shared society functioning smoothly. The government looks far beyond your weekly paycheck to fund its operations. They pull revenue from a variety of different everyday financial moves. For example, when you buy a banana at the store, you pay an extra leaf for sales tax. If you decide to buy your own treehouse, you owe property tax. And if you later sell that treehouse for a profit, the government collects a capital gains tax. Nearly every time wealth changes hands in the jungle, a tax is triggered. It acts as a constant built-in background cost to almost every financial decision you make. To figure out exactly how much income tax you owe at the end of the year, the government uses a system called tax brackets. There is a very common, very dangerous misconception about this system. Many people believe that if they earn a raise at work and jump into a higher tax bracket, their entire income gets taxed at that new, higher percentage, causing them to actually lose money. This diagram of a 3-tier bucket system shows how it actually works. Let's say our monkey makes 100,000 leaves. The bottom bucket holds the first 10,000 leaves they earn. The government taxes this base amount at 0%. The monkey keeps all of it. The next 40,000 leaves spill into the middle bucket. The government taxes only the leaves inside this specific bucket at 12%, which means they take 4,800 leaves. Finally, the last 50,000 leaves pour into the highest bucket. This top bracket is taxed at 22%, resulting in 11,000 leaves taken. When you add it up, the total tax bill is 15,800 leaves. That higher 22% rate only applied to the money in the top bucket. Because you are only ever taxed at a higher rate on your new income, earning more money mathematically guarantees you will take home more money. Once a year, you have to prove your math to the government. This vintage document is the original 1913 Form 1040, and it shows the formalized process of filing a tax return. You simply report how many leaves you earned over the year and compare it against the amount your employer already sent to the government. During this process, you can claim deductions. These are strictly work-related expenses, like specialized uniforms, essential job tools, or business travel. If you had to buy these items to do your job, the government allows you to subtract those costs from your total income, legally lowering the amount you can be taxed on. After subtracting your deductions, you reach the final number. If the tax you paid throughout the year was less than you actually owe, you have to write the government a check for the difference. But if your employer withheld too much, the government sends you a refund. Sometimes the tax collection agency, like the IRS in the United States, will want to double-check your math. If a tax return claims highly suspicious deductions or leaves out known income, they will launch a tax audit. Audits and returns serve as a reconciliation process to ensure fairness. They guarantee that every monkey in the jungle is playing by the same rules. If the rules apply to everyone, why do the wealthiest monkeys in the jungle seem to pay much lower effective tax rates than a typical worker? The answer comes down to how they earn their leaves. Wealthy monkeys often make their money by selling assets, like company stock or real estate. The profit from selling an asset is hit with capital gains tax, and that specific rate is generally only half as much as the standard income tax applied to a normal paycheck. They also use investment strategies called negative gearing. A rich monkey might buy a treehouse and rent it out, but spend more on maintenance than they collect in rent. They take an intentional loss on paper and then use that loss as a massive deduction to lower the taxes they owe on their other income. By combining specialized deductions and asset sales, the wealthiest monkeys significantly reduce their bills. The structure of the tax code actively rewards investment and ownership over daily labor, driving much of the wealth inequality we see today. For the average working monkey, the best way to navigate this system is simply to stay organized. Keep a budget throughout the year and save your receipts for any valid, work-related expenses so you can easily claim your deductions. If the math gets too complex, you can hire a professional tax accountant to file your return for you. And nicely enough, the fees you pay to that accountant are often tax-deductible the following year. It is also worth remembering that the rules change entirely depending on where you live. In countries like Finland, represented by this bustling street in Helsinki, the highest tax rates can reach over 57% to fund extensive social services. On the other extreme, there are places on Earth that boast a 0% tax rate. But as you can see from this isolated Antarctic research station, territories with no taxes usually don't have a standard population living there in the first place. Taxes are an unavoidable reality of life. Once you understand the basic rules, the tax brackets, and how to track your deductions, you can step into the economy with confidence, knowing exactly how to protect your hard